Hello and welcome. This discussion is brought to you by the experts at Pro Tax Accountant, and we are tackling a question that's probably on a lot of your minds. Is HMRC really planning some kind of tax raid for 2025? You've seen the headlines, you've heard the chatter. Well, today, we're going to cut through all that noise, show you what's actually going on, and most importantly, how you can protect yourself.
So, let's just get right into it. When you hear a phrase like tax raid, it sounds pretty dramatic, doesn't it? But what does it actually mean for you, for your small business, your side hustle, your rental income? We're going to break it all down, separate the myths from reality, and get to the bottom of what's truly changing with HMRC next year.
Okay, first things first, and this is really important. This isn't about the government rolling out a bunch of brand new taxes. Nope. What's really happening is that HMRC is getting a serious upgrade. We're talking new tools, better technology, and a lot more people, all focused on enforcing the rules that are already in place. The game is changing from their end.
And if you're wondering why this is all happening, look no further than this number: £39.8 billion. That is the UK's tax gap. It's the staggering difference between the tax that should have been collected and what actually ended up in the government's wallet. Closing this gap is now HMRC's #1 priority.
And how are they going to do it? Well, for starters, they're bringing in reinforcements. HMRC is hiring 5,500 new compliance officers. For you, that means more people, more eyes, looking at tax returns, investigating discrepancies, and checking the books of small businesses, landlords, and freelancers.
And on top of that, there's this quiet, almost invisible force at play called fiscal drag. See, the government has frozen the tax thresholds, so as your pay hopefully goes up, even just with inflation, you get pushed into higher tax brackets. It's often called a stealth tax because without any laws changing, you end up paying a bigger slice of your income to the tax man.
But it's not just about hiring more people. Honestly, their most powerful new weapon is technology. Think of it like a new digital dragnet. They are rolling out systems that can track income and spot mistakes like never before, making it incredibly difficult for any undeclared earnings to slip through the cracks.
And right at the heart of this tech revolution is something called Making Tax Digital, or MTD. You really need to know about this. It's a massive shift. Instead of filing a tax return just once a year, many of us will soon have to keep digital records and send quarterly updates to HMRC. That means they'll have a near real-time view of your business finances.
And don't think this is some far-off problem. Look at this rollout. It starts in April 2026 for anyone self-employed or with rental income over £50,000. Just 1 year later, that threshold drops to £30,000. You see the pattern, right? The net is widening, year after year, catching more and more people.
Okay, so we've talked about the big picture, but what does this actually look like for ordinary people? Let's get into 3 really common scenarios, real-world examples, that show exactly how easy it is to get caught out by these changes.
Let's start with the freelancer trap. Meet Sarah. She had a little side hustle on Etsy, making about $2,500 a year. She'd heard of the £1,000 trading allowance and just assumed, great, I'm under that, I don't need to do anything. Wrong. Here's the kicker. Platforms like Etsy, eBay, and Vinted now have to report seller earnings directly to HMRC. Her income got flagged automatically, and bam, a bill for back taxes, interest, and a penalty. And then you have the landlord trap. James had a couple of rental properties. He was making some, let's say, borderline expense claims, mixing in personal travel with a property visit, that sort of thing. The real problem was, when HMRC asked questions, his records were a mess. No clear digital trail, no receipts. The result? HMRC just disallowed a whole bunch of his claims, and he was hit with a huge tax bill.
And finally, something that catches so many people: the director trap. Priya runs a successful little consultancy. A small income bump pushed her just over the £100,000 mark. Now, what a lot of people don't realize is that's a cliff edge. For every £2 you earn over 100 grand, you lose £1 of your tax-free personal allowance. It created this sudden, massive jump in her tax bill that she just wasn't prepared for.
Okay, I know those stories might sound a bit scary, but here's the good news. You can absolutely shield yourself from this. This isn't about finding loopholes. It's just about being smart, being proactive, and being compliant. So let's walk through a simple 5-step plan to get you ready.
All right, here's your plan. It's all about acting now. Step 1, Go digital with your records. Don't wait for MTD to force you. Start now. Step 2, check your tax code. It's usually 1257L. A wrong code can lead to a nasty surprise bill later. Step 3, know your thresholds, especially that £50,000 hire rate and the £100,000 allowance trap. Step 4, maximize your legal allowances. Things like pensions and ISIS are fantastic for reducing your taxable income. And finally, step 5, be ruthless with your expenses. If you can't prove it's 100% for business, don't claim it.
Look, this can all feel like a lot to keep track of because, well, it is. The whole tax landscape is getting way more complex. The single best defense you have is to plan ahead, and trying to do that all by yourself in this new environment is frankly a bit of a risk.
When it comes right down to it, this is the new reality. Ignorance is no longer an excuse. With all the data HMRC now has access to, you can't just say, "Oops, I didn't know." The responsibility to get it right is now squarely on our shoulders.
And that's why getting proactive, expert help is more important than ever. The team at ProTax Accountant is there to help you get your house in order before HMRC comes knocking. You can get in touch with them directly on WhatsApp or by phone, or you can drop them an email. And for more simple, clear advice like this, make sure you subscribe to their YouTube channel.
So, we'll leave you with this one final thought to mull over. With more scrutiny coming, more data being shared, and HMRC laser-focused on that tax gap, the real question you need to ask yourself tonight is this: are my tax affairs really, truly ready for 2025?